down a path, and I'm trying to be equal opportunity questioner on this because I just asked Marcia Fudge this not that long ago. With the disaster at the FDIC under Marty Gruenberg's leadership and the culture, I'm sure you saw the article that all of us saw in November regarding the unacceptable behaviors that have been happening there. I'm concerned how it might impact their mission, and most importantly, how it would potentially spill over into the safety and soundness of our financial system. Following those revelations at the FDIC, did you take any steps at Treasury to make sure that Treasury isn't suffering from some of those same culture problems?
I mean, we regularly, we have a rigorous process for reporting and investigation of
nothing new necessarily. And I'm not trying to be accusatory. I'm not saying that there is a culture problem under your leadership. I'm just curious if that prompted you to respond. And since obviously FDIC is part of FSOC as well, I mean, there's multiple times that you would have interacted.
I'm not aware of any such allegations at Treasury.
Okay. Yeah, I'm not either. That's not what I'm saying. I just wanted to be clear. I'm asking everybody whether they have, when they saw the culture problems at FDIC, did that prompt anybody to change behavior or double down on making sure that whistleblowers are protected and those kinds of things?
We certainly believe in whistleblower protections and having in place systems that guard against the kind of thing that's alleged.
All right, I'll accept the answer. So I've got a minute and a half here. I want to shift topics to the CFRAC. Committee was established almost a year and a half ago. That's climate-related financial risk committee under FSOC. It looks like, according to the website, they've met twice, March 7 of 2023 and July 18. Your report devotes a lot of time to the potential impacts of climate change. In fact, you say that's one of the things the council is focused on member agencies enhancing assessment efforts and increasing coordination around climate-related financial stability risks. That's in your written testimony. Has there been a problem? Has there been a lack of cooperation or coordination?
No, I think CFRAC is...
So then why are you having to enhance those assessment efforts?
Well, all of the agencies are increasingly focused on understanding the risks relating to climate change. And it's appropriate for them to work together to exchange information.
In my closing seconds here, are there any CFRAC meetings that have not been listed on the website?
Not to the best of my knowledge.
Okay, could you check on that and please get back to me?
Certainly.
And then I guess I'll finish with this. I'm sure you're aware the SEC has been working on their climate rule for 2 years. Do they consult or do they just jam the rest of FSOC like they've been jamming those who they are trying to regulate?
The gentleman's time has expired.
It's the SEC's rule. I'm supportive of their requiring disclosure on that.
Any additional comments can be submitted for the record.
Thank you, Mr. Chairman.
Thank you. The gentlewoman from Ohio, Ms. Beatty, is now recognized.
Thank you, Mr. Chairman and Ranking Member. Secretary Yellen, thank you so much for being here today, testifying. And also, I want to take this moment to thank you for clearly outlining for us risk factors, but then identifying the 5 areas that you're working on with the risk factors, and for being very transparent about that. And also for the work that you do to keep our financial system safe and secure. I'd like to start with climate-related financial risk. The FSOC report identifies climate change as an emerging and rising threat to the United States financial stability. I too am concerned about this threat, especially considering the fact that low-income and minority households are more likely to face greater climate risk. Can you explain why these communities are at greater risk and how failing to address climate risk can exacerbate certain disparities that are already at risk, such as like housing values and the cost associated with home ownership in some communities?
Well, I believe there's a large body of research that shows that low-income communities are more exposed to some of the physical impacts of climate change, and that they may be less able to afford protections, whether it's for their home or insurance that's necessary to guard against it. And so it is a severe risk to low-income communities.
Thank you. Let me turn now to FSOC's guidance on the designation of non-banks as systemically important. First of all, let me thank you for your leadership in issuing this guidance. As we see increasingly large roles that non-banks are playing in the financial system, it is clear that any strategy to protect financial stability must also cover non-banks. Nevertheless, there has been some concerns about due process for non-banks that are designated as systemically important. FSOC's guidance emphasizes that non-bank designation process will entail engagement with both the company and its current financial regulator, if it has one. Can you describe what other due process protections exist for the company? For example, the ability to request a hearing, meetings with FSOC staff, or the need for a 2/3 vote for destination and how annual FSOC's reevaluation.
Well, I think you just listed the protections. The company would be provided with a great deal of information from FSOC if it completed stage 1 and entered stage 2. It would have opportunity to provide any information that it thought was eligible, the right to a hearing, and as you said, designation requires a 2/3 vote, including the vote of the chairperson.
And lastly, when I was the chair of DE&I and you would come before the committee, I think it's important again for me to thank you. You always had some of the highest numbers, or you admitted what you were doing and working on it. I think I should be concerned now in light of all that's happening across this country, including in financial institutions. I'm concerned about the effect that DEI rollbacks at financial institutions will have on our financial stability and on access to financial services in low-income or marginalized communities. And so I don't know if you have any comments, or are you concerned when we are still struggling in America to make it look like America?
Certainly, let me say the Biden administration and Treasury and other agencies I'm aware of, we have a robust and committed agenda to promote diversity in all of the work we do, not only in terms of our hiring, but in terms of all of the programs. For example, at Treasury, we have undertaken research that you're probably well aware of that shows that low-income individuals, African Americans, are disadvantaged by the way the Earned Income Tax Credit has been. So we are trying
The gentlelady's time has expired.
root out.
Thank you, Mr.
The gentlelady's time has expired.
Thank you, Secretary Yellen.
The gentlewoman from Missouri, Ms. Wagner, is also the chair of the Subcommittee on Capital Markets, is now recognized.
I thank you, Mr. Chairman. Secretary Yellen, as Treasury Secretary, you championed requirements that any deposit flows into Americans' bank accounts totaling as little as $600 are to be reported to the IRS. Increasingly, we are hearing the federal government is suggesting banks search private financial transactions using highly partisan political terms, or check to see if customers made purchases that could be associated with legal sales of like firearms or even religious texts. My question is this: has Treasury, including FinCEN or federal banking agencies like the Fed, FDIC, OCC, instructed financial institutions to search Americans' legal transactions in attempts to surveil their purchases?
Well, we received a letter from you, I believe, on this topic, and we intend to investigate fully and to respond.
Have you
as soon-
instructed banks and
Have-
financial institutions to provide this information?
Well, FinCEN's job is to work with financial institutions to make sure.
Are they
that
instructing,
they-
ma'am, financial institutions to search Americans' legal transactions in attempts to surveil their purchases?
I promise a thorough look into everything.
Well, this is
that's
really
occurred.
concerning, and I would hope
I'm
that you
so-
get to it just as quickly as possible, Madam Secretary. Secretary Yellen, I'm going to give this a shot too, since we all have, on both sides of the aisle. The Financial Stability Oversight Council, of which you chair, Madam Secretary, you chair
I'm
FSOC.
aware of that.
In 2023, FSOC put out their annual report plainly stating that, and I quote, the U.S. banking system remains resilient overall. And, I quote, U.S. banks continue to have sound levels of regulatory capital. Do you still stand by these statements, ma'am?
As an overall statement, I do.
Then what is the need for the proposed massive increases in regulatory capital requirements from the Fed, FDIC, and OCC?
They have proposed regulations to enhance the safety and soundness of some.
But you just said that the safety and sound is there. It's resilient. They are well capitalized. It's clear in your, as a chair, your report.
Well, there are risks that that their guidance suggests could be handled better than
All
it
right,
has.
let me move on. Secretary Yellen, in a 2019 letter to Secretary Mnuchin and in 2021 testimony to the Senate Banking Committee, you said that activities-based regulation is the appropriate approach for asset management. Given the FSOC's recent guidance regarding the designation of non-bank financial institutions as systemically important, do you still stand by those public statements?
Well, I'm not sure that I said such a sweeping statement as you read. I don't know.
I have it right here. It's
I don't
a letter.
know if that's,
I'd like it into the record, please. This is your letter with those words, ma'am. So I would tell you to go back to your 2019 letter and then again to your Senate banking testimony in 2021.
2019, did you say?
In 2019, a letter to Secretary Mnuchin, and in 2021, your testimony to Senate Banking Committee. You said activities-based regulation is the appropriate approach for asset management. I want to know why we're finding, DEFSOC is saying that designations of non-bank financial institutions are systemically important. Clearly, others don't. Why do you believe FSOC did wrong that led to the courts vacating the MetLife designation in 2016, ma'am?
Look, there is no preferred approach to how to handle a financial stability risk that's been identified. In some cases, and perhaps this is what I was referring to, if that's an accurate quote,
It is.
We are, for example, concerned about risks associated with money market funds.
Are you doing
We
a
have
cost-benefit
been
analysis?
concerned-
Anything?
Excuse me. We have been concerned about the pressures on open-end bond funds that can be forced to sell less liquid assets. These are industry-wide practices that are probably
The court has already
best
vacated you once,
addressed
ma'am.
with activity-based approach.
Mr. Chairman, I
Secretary
yield
may,
back.
Yes,
the Secretary may respond in writing the remainder of the answer. The gentlelady's time has expired. The gentleman from Massachusetts, Mr. Lynch, is now recognized.
Thank you, Mr. Chairman. Madam Secretary, would you like additional time to express your thoughts there? You were sort of cut off. Rather than adding them in writing, would you like some time to respond?
Yes, if I could just,
Or we could move on, whatever your choice.
thank you, if I could finish the thought.
Yeah, that'd be great. Yeah.
Sometimes activity-based regulation is the appropriate approach when there's an industry-wide practice of concern, as for example, has been the situation with money market funds or with open-end bond funds. However, sometimes the risks have to do with a particular institution. For example, the largest U.S. banking organizations are recognized that their failure could result in a threat to financial stability. The same could be true of a non-bank institution, and in that case, designation is appropriate, but it depends what's the appropriate form of response by FSOC depends entirely on the specifics of a situation and the threat that's involved.
And I thank the gentleman for his time. I couldn't.
Reclaiming my time. Well, that makes perfect sense, Madam Secretary. Recently, FSOC identified the use of artificial intelligence in financial services as an emerging vulnerability in the U.S. financial system. And not very long after that, Chairman McHenry and Ranking Members Waters created a bipartisan working group on artificial intelligence, and I have the good fortune of being the top Democrat on that working group. I have some concerns. I think there are some opportunities, to use artificial intelligence in a thoughtful way. I think about the work that FinCEN does and trying to analyze suspicious activity reports, suspicious transaction reports, and CTRs, and how they might analyze those. But I think there's also a risk on the explainability end of some of these algorithms that are being used, and also the fact that many smaller firms are acquiring, rather than developing their own data sets and developing their own artificial intelligence, they're just simply buying them. And I'm not quite sure that that they have the expertise or the personnel to make sure that technology is used in a compliant way with existing financial regulation and laws. Do you have a sense of whether we have the capacity in the industry to onboard much of this artificial intelligence that is being that vendors are offering to financial firms?
Well, we are concerned. In this year, FSOC identified the use of AI in the financial sector as a potential financial stability risk. And at the moment, we're trying to understand what the risks are. Some of them are related to, as you said, explainability when models are used and generate outputs. I believe the CFPB has been clear that financial institutions, when they take credit actions, have to explain to the customer what the reason is, and not to be able to say, well, an AI system generated this result. But there are a whole variety of risks to customers, to cyber, and we're trying to build our expertise and work with the financial sector to address these risks.
Is it accepted that, at least from Treasury's position, do we accept the fact that when a financial firm acquires AI, that AI company, that vendor, is now a covered entity under financial services laws? Is that accepted, or is that still in dispute?
I'm not sure. I need to get back to you on that.
Okay.
But certainly when it comes to third-party providers, the banking regulators, for example, do have authority to make sure that
The gentleman's time has expired.
standards are being met.
The gentleman's time has expired.
Thank you, Madam Secretary.
I now recognize myself for 5 minutes. And Madam Secretary, you tout a historic recovery, a healthy labor market, and, quote, economic strength. And Larry Kudlow's name was invoked earlier in this hearing, the former Trump White House economic advisor. I know Larry Kudlow, and yes, he acknowledged that we're not in a recession right now, and I wouldn't presume to speak for Larry Kudlow, but I do think he would agree with me that asking Americans to feel good about Bidenomics is like asking them to smile during a root canal. The discomfort is just too hard to ignore. Americans continue to suffer from the effects of 40-year high inflation experienced throughout the Biden term so far, including lingering high prices. And the administration may wish to tout inflation numbers coming down. But, Madam Secretary, you're an economist, and as you know, inflation, which is the rate of increase in prices, should not be confused with the overall level of prices. And prices have continued to rise even as the rate of inflation has fallen since the Fed began an aggressive program of monetary tightening and since House Republicans put a stop to Washington's spending spree. So as a result today, even with the decline in the rate of price increases, a family of four is paying $15,000 more per year just to purchase the same goods and services compared to the day President Biden took office. Yet the administration's plan to fix inflation caused by too much spending is even more spending. That's why the Inflation Reduction Act is perhaps the most misnamed legislation in American history. But this is a supply-demand mismatch. Too much spending created excess demand. Climate obsession constrained the supply of energy. But now the administration and the Fed is proposing to constrain the supply of credit, which will exacerbate inflation through this Basel III endgame, precisely when corporate and commercial real estate borrowers will need to refinance at higher rates. So, Secretary Yellen, I want to ask you about Basel III. The heterogeneity and business model diversity within the banking sector distributes and diffuses risk across the system, and I believe contributes to system-wide financial stability. The Basel III endgame proposal would de facto repeal regulatory tailoring, subjecting Category 3 and 4 regional banks to one-size-fits-all standards that currently apply to GSIBs, eliminate the use of internal risk models, and transition the industry and regulators toward a standardized framework, reducing business model diversity, and push financial intermediation and lending outside of the bank regulatory perimeter. The banking industry will get smaller and more concentrated as a result. How does any of this reduce systemic risk?
Well, having strong capital and liquidity and resolution standards, I believe, does diminish systemic risk. And I think we have seen a clear example of this in the ability of the banking system to weather the pandemic.
Yes, ma'am. And reclaiming my time, just real quick, reclaiming my time, you have said many times that our banking system is currently well capitalized. Do you agree that a less diverse banking system, a barbell banking system, banks under $100 billion not directly affected by this proposal, and Wall Street too big to fail banks, but no regional banks because of the forced consolidation this would provide, and less diverse business models that this proposal will produce, do you believe that that strengthens financial stability or undermines stability?
I think we benefit from having a diverse banking system with institutions that meet different needs of different firms and
I agree.
different households.
And Secretary,
banking agencies have received extensive comment
Yes.
on all of these issues.
I know. And just reclaiming my time, because I only have a minute left, I agree with you that diversity and heterogeneity in the banking system and diverse business models actually diffuses risk. And FSOC should consider that as they consider Basel III Endgame. So to my final question, continuing with this topic of consolidation, which I believe Basel III would accelerate, the OCC's recent proposal on mergers and acquisitions would ban mergers for a nationally chartered bank, even if it's a transaction for a smaller CDFI or adding essential technology expertise. Even the smallest banks would face new scrutiny and prolonged delays of mergers that could threaten their viability. The OCC's proposal will increase the likelihood of costly and disorderly bank failures and decrease competition for GSIBs. Secretary Yellen, won't this proposal increase systemic risk and reduce banking services?
I'm sorry, I think this is a question for the acting controller of the currency rather than
Well, my time has expired, but I think it's an FSOC issue. Is the fact that you would not have orderly consolidation and result in bank failures. That is a systemic risk issue for you, Madam Secretary. With that